All right. Let's roll in. It's another good day. Today is March 15th, 2021. It is Monday, the start of another brand new, beautiful week. Here to break down some good charts for you guys and start the week off on the right note, man. I hope you guys are ready because it's going down for sure. Welcome back to the channel. It is your main man, Ty Trades Futures, coming at you for another episode. This is episode 3 of Trading My Live Strategy, working on building up their scalping strategy and trade the S&P 500, trying to make a whole bunch of good trades today. And my main focus will be 1, stay patient. That's what I want to always focus on. 2, FOMO needs to be avoided, meaning that we need to take trades from the best possible levels, which starts off with good analysis. So let's go ahead and jump into that right now. Of course, as you guys know, if you don't know, we'll be trading the S&P 500 primarily today through the futures vehicle. That is our main way of trading these markets. And since it's the start of a new week, let's go ahead and look at the weekly chart and start breaking these things down. So if we look at the S&P on the weekly chart, we can see that the trend has been up since March of 2020. Now, if we were to zoom out further back, we could go back as far as we really wanted to. These are the S&P futures, so they only go back to 1997, but the S&P has been around since the 1800s and it's been going up since then. And as we look at this chart, we can see more of the same. Yes, the market does have big down moves and it does have bear markets, but over the long term, we know that most indexes, especially stock indexes, love to go up, and the S&P 500 is one of those. So that's the main reason why we're seeing such a strong uptrend, even though we just came out of a pandemic. Like you can see, during the height of the pandemic back in March, the market was already rebounding because people were thinking about the future prospects. Man, my mouse just went dead, y'all. Oh my goodness, you gotta be kidding me right now. Hold on, man. Wow, come on, mouse. Not right now, bro. Hold on, y'all. I'll be back in literally 1 minute. Stay tuned. Tell me what you think about this chart until I get back. Man, if that ain't some bullshit. Oh, now it's working. What in the world? Okay. Crisis averted. See, that's the problem with technology. Sometimes it works, sometimes it doesn't. The plan is always have a backup. So that's one lesson we learned right there. I should have had my backup mouse ready. So let's hope it doesn't go out for the rest of the session. At least it went out when we were doing the analysis and not when we were live trading in the middle of a trade and we need to get out. But anyway, what was I saying? So yes, we can tell that the S&P has been up in a nice uptrend even during the midst of the pandemic. People were already anticipating that the economy was going to open back up and that, the world was not going to be over because of a virus. And of course, those people were right. We've had a vaccine that's came out, multiple stimulus checks, and all of that has led to the market just pushing higher and continuing to move up. So we know that on the longer term time frame, that the daily charts and the weekly charts represent a strong uptrend. So we know the longer term, bigger picture is definitely up. So we always want to keep that in mind, especially as a day trader. Now, what happened last week that was really interesting was the fact that we came back up and we tested these all-time highs that we used to have over here in February from February 16th. The high price for this candle was $39.59. If we scroll back over to March 11th on Thursday, the high for this candle was $39.58. So it literally came back up and tested that level. It tested the all-time high. And the next day after that, on Friday, it had a huge down move, right? We can see that for the red candle, but look at how it closed. That red candle, let's zoom in a little bit. So this red candle right here from March 12th, Initially, prices moved all the way down to around 3,900. We see the low for this candle right here is exactly 3,975.75. So prices flashed all the way back down to a major support level and they bounced off of it. If we follow this wick all the way over to the left, it lines up with a previous area that used to be a high. Now it looks very minimal because we're on a daily chart, but when we break it down to the smaller time frames, we'll see exactly what I'm talking about. So that's typical of the market. It's not just going to flash straight through and run straight past a previous all-time high. It'll come back, touch that level, pull back a little bit, give buyers better prices to get into, and then everybody that wants to go long goes long from the next level of support below, and that gives the market enough momentum to push prices higher past that all-time high. So right now we're on the wave back up. We come out of the pullback from that double top test of the all-time high, and now more than likely this week we should be coming back up to either test those all-time highs or break them. We're only about 23 points away from where they are right now, so it could possibly happen today, so let's keep our eyes open for that. But of course we want to look at the smaller time frames to judge exactly what the trend is right here and right now, because even though the trend is up, if the trend is down for the day on the lower time frames like the 5 and the 15, then we might have to be short. And that's why you always take a good analysis of not only the longer term time frames, but the short term as well, because we're not trading for tomorrow or Wednesday or Thursday. We're trading for today. So we always want to make sure everything lines up. So with that being said, let's look at the hourly chart. Now, let's start from Thursday up here at these tops from 39.58, the all-time highs we were just talking about. So we see that prices came all the way down to 3,900, right? But since that point, look at what they've been doing. They pushed up, made a higher low, pushed up, made a higher high, pushed back down, made a higher low in comparison to where it came from before. Now, here's the thing. It pushed up and made a slight double top right here. So one thing I know about strong uptrends is that when you see a double top, you respect it, of course, because that represents a potential pullback. But you always look for the failure of those bearish patterns that pop up in a very strong uptrend, because more than likely those patterns will be undone by the buyers and you might only get a pullback instead of a reversal like those patterns should kind of lead to. So when the trend is strong, keep that in mind. Now, if we look at the line chart, it's like we have two conflicting signals, because for one, we definitely have that double top right here at these lower levels, 39.44. But also on the same note, we're coming into a potential double bottom right here at 39.30. Now, remember from last week, 39.30 was one of the key levels that we were playing off of all week long. So we should expect that same level to be important going into this week as well. And we'll see how that goes as time plays out. And this top up here, the double top, is closer to 39.50. Remember, 39.50 is one of our major half level numbers, which was also a major level last week. So it looks like we're really just trading in a similar price range, that we were last week, and we've seen this situation before. Now, usually what happens is that we have to wait for this consolidation period to break, either break above 39.50 or break below 39.30. So that looks like that might be the plan of action again today based on what we're seeing on the hourly chart. If we break it down to the 15, we really just get a more concrete explanation. But on the 15, I'm starting to see something a little bit different. Now, what I'm kind of seeing, I think it's a little bit of a stretched out pattern, but the pattern kind of holds up nonetheless. I'm seeing an inverse head and shoulders. So if you were to consider this entire area from March 12th right here to March 12th right here, right? So from here to here, this would be considered the head. Now, this would be considered the left shoulder, this point right here, and these areas over here. And if you follow that line all the way across, you could consider this one the right shoulder. Now, the only thing is you usually want to see an inverse head and shoulders coming out of a stronger bearish trend. Basically, you want to see it coming out of a strong downtrend. That's a reversal, not just a pullback. So that's the one caveat for this situation, is that, yes, we do see an inverse head and shoulders, but we're also coming out of a pullback and not a reversal, so that makes a difference. Now we'll see how it plays out, because sometimes if you see the pattern on the chart, it could work. Excuse me. So one thing we always want to do is keep that in mind. That's one puzzle piece that we can definitely put on the table and potentially look out for today as well, because if this is the shoulder level, prices have failed to break that. The shoulder level, if we follow it across, lines up with the price level of 39.25. That's not a coincidence. That 39.25 is a major level of either support and resistance depending on what the market is doing, but quarter levels always hold up, and this is more evidence of that right here. That quarter level 39.25 actually forms the shoulder for our potential inverse head and shoulders. So let's keep that in mind as well. We have a lot of bullish signs on the chart, so things should be looking good. Like if we remember, the S&P overall on the longer term chart is definitely in an uptrend. So throughout the days, from a day-to-day basis, we should expect some type of up move over time. Now the 5-minute, it really just shows the same pattern that we were seeing on the 15. So I mean, I'm not really seeing anything that points to the selling side besides this double top. So in my opinion, once we break 39.50 and we have momentum breaking that level, then we have a lot more room to move higher. Of course, first, let's go ahead and map out some potential levels we could look for upside targets. So let's look at 39.60 up here. Now, remember these levels, 39.58, 38, 39.60. Those levels are the all-time highs, and they still are. So we always want to respect that level, of course, for sure, and we never want to look past that. But every all-time high is there to be broken, and eventually, if the trend is strong enough, they will be. So because we're only 20 odd points away from it, we definitely want to consider that for today. And if we look at what we've been doing since last week we had a great week for long traders. The market was moving up pretty much all week long, and it had some very strong trending days. So based on what we've been seeing last week, and based on what we've been seeing with our analysis that we've already done, the situation could look pretty good for the upside for the S&P 500. So let's go ahead and move over to the Dow Jones futures, and let's get a quick little update on what's going on in that department. If you guys remember, the Dow Jones was actually the leading pair from last week in terms of equities, because you know that each one of these equities move in a very similar correlation type of pattern, meaning that the S&P is going to make a very similar move to what the Dow Jones is doing, and the same thing is true for the NASDAQ. All three of those pair, and also the Russell 2000, all four of those stock indexes move in tandem together and have a very strong correlation. Now last week the thing was, the Dow Jones was making all-time highs, but the S&P and the NASDAQ were lagging behind and were actually in a pullback at that time, while the Dow Jones was making new all-time highs. So I was saying that, look, either the Dow Jones has to fall back down and get back to where the S&P and NASDAQ is, or the S&P and the NASDAQ will catch up with the Dow Jones and move up. Now, since we know that the overall trend was definitely up on the longer term charts for all of those pairs, then more than likely it was a higher probability that prices caught up to the Dow Jones. And I think that played a major role into why we saw the S&P moving so fast and so hard last week. It was a lot of momentum, like more than normal. You usually get maybe one trending day a week. We got 3 last week, so that's extremely a good sign for us, especially on the long side. Now, if we're looking at the Dow Jones, we can see that it's continued to make all-time highs. From last week, I think it made an all-time high every single day, because last week started on what? Today is the 15th, so that was the 8th. So we can see every day after March 8th, the market made an all-time high. So the Dow Jones was pushing up all throughout last week, and we are continuing to move up. We see a very similar pattern to what we see on the S&P. Only difference is this, I would say, double top, almost kind of double top on the Dow Jones is forming above its previous level of support. So in my opinion, we can tell that the bullish trend on the Dow Jones is even stronger than the S&P. So we know based on our correlation that If the Dow Jones is already showing strong signs, then more than likely the S&P will follow behind, and so will the Nasdaq. So let's keep that in mind as we go into today's session. It's 9:28. We have about a minute and a half until the market opens. So while we're trading today, make sure you guys check over into the chat. We will be interacting with you guys live and direct. We already have 3 people in here so far. So what is going on to you guys? I appreciate you for tuning in. And let's go ahead and get this analysis in, man. Let's do it. Trading is about to commence. It should be a good week, man. Let's go ahead and look at our key levels one more time. 39.58, of course, that's the all-time high. 39.50, some major half level. 39.30, we talked about that. 39.25, yes. 3900, we talked about that as well. So before the market opens, let's just go ahead and look for whatever levels will be important above 39.58 at those all-time highs that we were considering. So let's look to the left. Now, as we can see, that 39.58 was holding up strong. So that's the one thing about having all-time highs. There will be nothing to the left. So we just have to rely on our levels. We know that after 39.50, the next major level is the quarter level above it, 39.75. So that's the major level that we will be potentially looking for today. And as you guys can see, we're already at 39.45 beginning the session. Session has just opened. Let's go ahead and zoom all the way in. Auto fit this chart. And let's go ahead and get a good session going. Now we can see that coming out of 39.39, we kind of formed another inverse head and shoulders right there, where on the 1 minute chart, this is the head, these are the 2 shoulders, this is the neckline. Once we broke above the neckline, we're all good. We made a higher low, and so far we're continuing to do more of the same. Now let's see how this market opens, and let's see if buyers can come in right off the rip and push prices higher. All right, so we see a slight up move, but you know, at the open, we always want to wait for the trend to be established, because even if the chart is indicating one direction to you, at the open, because so much volume comes in, the markets can really go any way that they want to. And that period when the market first opens is called price discovery. It's basically a period in time where all the buyers and sellers kind of are waiting around to see which way the market is exactly going to go. And based on what they see during that first opening discovery period, then they decide which way they want to go for the rest of the day. Now, this price discovery period, the time range could vary. Sometimes it lasts for 10 minutes, 15 minutes. Sometimes it might last for 5 minutes. And then on some occasions, it might last for an hour, even an hour 30. So it really is a test of your patience no matter what day you're trading in. And you really just want to sit back and observe and start trying to pick up clues as to which way the market is moving. Now, if we're looking for clues, we can see that when the market opened, it formed a whole lot of wicks, meaning that the sellers were trying to step in. Now, they pushed prices all the way back down to this previous level of support, and they wicked off of it 1, 2, 3 times. And then they pushed all the way back up above the level where the market opens. So that's a good sign. We're seeing, coming off of these bottoms, we're seeing a higher low, another higher low. So everything is looking good. Uptrend is still intact. Now we just need to find some good places to get into this move so we can maximize and get some profits today. Now, I still think even though the trend is up, we're still in the price discovery period. We're not even 3 minutes into the session. So we always want to be patient and let the market kind of figure out which way it wants to go, because anything can happen at any time in the market, and we want to make sure that we're on the right side of the chart. So what's interesting right now is the fact that when buyers stepped in as the market opened, they pushed prices higher all the way up to 39.46. But then the seller stepped in on this last candle and undid everything that the buyers tried to do. So let's see if the sellers can continue to push the market down like they've been doing, or if it was just a fluke. Now remember, the overall trend is up, and we broke out of a potential inverse head and shoulders. So prices should come back to retest the neckline eventually. The neckline is right here at 39.41. If we follow that across, we can see that the wick and the prices just came back down to test that level. And look at what we're seeing. We're seeing higher volume coming out of that test. Now, if you guys know this stream and you've been on here for a minute, or if you're new, one of the few things that I love using on the chart is volume. Volume gives you a good, very, very good idea of all the market activity that's going on at that point. Now, whenever you see high market volume bars down here, this is the volume column. See right here, volume. Whenever you see higher volume, especially a higher volume candle than what you saw at the open, notice at the open, we did 758 contracts. Now, at 9:33, the last minute, we did about 800. So that's exhaustion volume. Whenever you see a higher candle than what you saw at the open, that means that whatever move you were just looking at is pretty much coming to an end, or it at least will have a pullback in the very near future, which is what we're seeing. We see prices make a long tail wick at 39.41, and so far they've already moved 4 points higher and are potentially coming back to test these tops at 39.46. Now remember, we're not really looking to go long until we break 39.50. Now, something that's interesting to me is the fact that we've only traded 800 contracts in 1 minute, which means that we might be on the wrong contract month, because remember, every 3 months we need to roll our futures contract. So let's go ahead, roll our chart forward, and we can see the difference in volume. It went from 83,000 to 43,000 to 180 something. So let's go ahead and close that chart, bring up our new one. And this is actually one of the things you want to make sure you always check before the market opens. I kind of forgot. But we see when we switch to the next futures chart, we were on MESH. H was the contract month. Now we're on M. So remember, futures contracts expire every 3 months. So you got to know that when you trade them, because when March rolls around, you need to remember, you need to roll your contracts forward to those June months. June is the next contract expiration, and that's represented by the contract month M. So that's why it's MESM right now. So we see the same chart, same futures, but the volume is different. See how the volume is 3,400 on this occasion? It was like, what, 800 on the last one. So same chart, same volume patterns, different volume numbers, and that makes a huge difference because of liquidity. But we don't want to focus on that too much. We want to look at getting into this uptrend right now. So as we can see, once we got that exhaustion volume, what did markets do? They started to pull back. Now, since we know the overall trend is up, that's what we'll be looking for throughout the rest of the day. All we do is look for setups like this, where we see a pullback and we see exhaustion representing and telling us that maybe the pullback move is potentially over. And then once we see confirmation of that, which in this case would have been the lower high that we made right here with this wick, then we go long. So we didn't get that trade right there, had some technical difficulties, but now we're all good. We're looking for our next entry point. So we see the bulls coming in with a lot of strength. That's a good sign. Remember, those all-time highs are not too far away, about 20 points higher. We could definitely touch those today. But first, before we do that, we need to move past this last level of resistance above towards the left from about 6:57 this morning during the pre-market hours. Notice how if we follow that to the right, it lines up with this level at 39.40, which lines up with this level where we just made a potential top. So we need this level to get broken, and once we do, we're pretty much clear for higher prices. I think if we were really to be aggressive, we could say that we were clear right now, depending on how this candle closes. We had a large momentum candle from the buyers, but it was made on a little bit higher volume, so we got to be a little bit cautious about that. But the overall trend is up, so I'm more so leaning towards the long side. I don't like the fact that prices kind of reversed this dramatically with a V pattern top, but since the overall trend is so strong, I gotta lean towards the long side. So I think I can take a aggressive trade right here. Definitely an aggressive long. I will put my stop about 2 points below at 34. So let's go ahead and get into it. Let's get our feet wet. Oh no, I forgot to put my brackets on here, but it's all good. We'll do it manually. The brackets are basically your profit and losses. They're not on here automatically, so we'll have to stop it out manually 2 points below if we get it. So our stop is at 34.50. Our take profit is at, really, I just want to hold it throughout the rest of the day. So we'll see. I'll take it at 38.50 if I see it though. But we can go ahead and put our sell orders in manually. We don't have to wait for it to hit and click the button, because that'll cause us, that takes time, and sometimes the market moves so fast that it doesn't give you that time. So let's go ahead, put our stop below right here, 34.50. Put our stop above, put our take profit above at 38.50. And let's let that shake out. But honestly, I feel like if I'm going long right here, I just need to hold it for higher prices. That's one thing I've been working on. If we look at my Excel sheets a little bit later when we have time, that'll be in the improvements column. I've been trying to focus on, man, that looks like a lower high. I've been trying to focus on taking my good trades and holding them and getting more than just 2 points out of them. Because sometimes I can get 5, 6, 7, 8 points in a strong uptrend, and I don't want to cheat myself out of those profits. I deserve them. I did the analysis. I should get everything I can get from it and not shortchange myself. But I actually don't like the long trade right now. Things are looking a little bit shaky, so that's why I just closed that position just for a break-even profit. Not all that bad. Sometimes when you see that the market isn't necessarily lining up to what you want, you can get out. And remember how I said we were taking an aggressive trade. So when you take an aggressive trade, you really got to be on your P's and Q's and be ready to get out at a moment's notice if things don't look right. Because with aggressive trades, the probability of your stop being hit is a lot higher. So you want to make sure that you mitigate all of that risk if you see it starting to roll in. Like, don't watch the train come down the tracks and say, oh, nah, he'll stop. He won't run me over if I stand here. Yes, he will. So if you see the train coming, get out the way. And that's what we were able to do right here. We see we would have got stopped out easily on this candle right here. So that I kind of saw that from, for one, how nasty this reversal was. You don't want to see pullbacks like that. Notice how on the line chart, this pullback made a V pattern. That's not the pullback you want to see. A good pullback is something like this, where you start here and kind of move diagonally. You don't want to move straight down. That's not a good sign. And then after you move straight down, we got a lower high right here that's pushing us all the way back down to these support levels. So that, in my opinion, is not very good for the bulls. That's not something that you want to see. That's very bearish, as a matter of fact, because at the open, we had a nice up move. We started with a nice up move, and then the sellers came back in and said, nah, broski, I don't think we want to move that way today. Well, at least for right now. So we have to be aware of that and be able to switch to the short side if we need to. But let's keep in mind that the overall trend is long, so we need confirmation. So all in all, with all of that being said, that just indicates that we're still in the price discovery period. We thought we were out of it when we were moving to the upside, but the sellers came back in and said, nope, let's move back into our zone. So technically, we actually have not broken above 39.40 or above 39.30. So that seems like our price discovery range period for today. So let's go ahead and mark that up. Rectangles, shapes, boom, there we go. So let's draw the top of the box up here at 39.40, where our top is located. Let's bring it all the way back down to our lows towards 39.30. Boom, there we go. Let's go ahead and call this breakout area. Boom. Let's go ahead and actually change the color a little bit. There we go. That's nice. Yeah, I like that. So decrease the transparency a little bit. And boom, this is our breakout area right here. So we're really not trying to make any big time moves until prices break, either below or above. Now, based on what I'm seeing, it's looking like prices are really just about to break through and continue going. It would be a little aggressive to short, but I really like to short right now. But I'll be patient. But if you guys want to take the aggressive trade right now, I would say short it right here and then potentially put your stop back up here at 39.37 at the top of these breakdown candles. Now that's the aggressive trade. Remember, aggressive trades give you a higher probability of being stopped out, but they also give you a higher chance of being right in the moment. Now me, I'm on the conservative side, so I'll just be waiting for prices to resume the uptrend, because I don't know if I necessarily believe in the short. Because remember, our breakdown our breakdown zone is placed on top of 39.30, one of our key major levels from last week that acted as support all week long. And then if we look to the left, it lines up. It's not too far away from the neckline for the inverse head and shoulders we were just talking about. So that, as you guys can see, y'all are inside of my head right now. I'm sharing my thoughts as they come across. See how I was considering the short trade down there? That would have been the wrong decision. So that tells me that I might be thinking a little bit aggressively today, because remember, I took an aggressive entry up here and then thought about taking another aggressive entry down here. You know, my better mind prevailed, but that's still my train of thinking. So as a trader, you got to be able to not only analyze the chart, but analyze yourself and how you're trading potentially throughout that session and be able to adjust on the fly. So I know if I'm being a little bit aggressive, that means that I just need to be patient. And that's why this breakout zone is so important to me. This is my patience zone. If prices break above it, we can start trading. Prices break below it, we can start trading. So until then, I'm kind of chilling. Now, something interesting I saw last week is that the breakout zone, whenever prices came to the bottom, you could have actually taken a long trade from that area and then play on a potential break. But that's another aggressive trade, so I'm not really trying to take that today. It's a Monday. I want to ease my way into the week. We'll have plenty of opportunities throughout the week, all week long, I'm sure, to catch as many aggressive trades as our heart desires. But right now on a Monday, let's take it easy. It's like getting back into a pool during the summertime. Like, if you just get into the pool, some people are going, start in the 3 feet and then work their way towards the deep end. But then some people are just going to come in and just cannonball straight into the deep end. It all depends on who you are. So what we're seeing right now in the market, we see a potential lower high. Notice how we made the ultimate high up here at 39.40, top of the breakout area. Pulled down, made a lower high right here based on this wick. Pulled back down to the bottom of the zone. Buyers tried to step in and push prices higher, but we had a tweezer top right here that made another lower high. So that's three lower highs in a row. What is that telling us? That's telling us that the sellers are trying to step in and push this market lower. So we see that they're making strong efforts, but we can't validate their efforts until they break past that breakout zone. So they're making good progress, but they're not complete with their mission. Until they break the bottom of this breakout zone, we can't even consider the short trades yet. Now let's go ahead and pull out to the higher time frames, because we always want to make sure that we see what's going on through the bigger picture, through bigger eyes and bigger lenses. Now on the 15, it's looking kind of shaky, because remember, we were coming out of a double top, right? And then we pulled down. This right here would be considered a lower high in comparison to this this top up here that got made from the double top at the all-time high. So that's not a really good sign. And then if you pull up the candles, you can see that it was a long tail wick that came up and tested that area. And after that candle, we made, or at least we're making right now, more push to the downside, which means that this move is continuing, that the sellers have already started on the candle before. And mind you, that was on the 15 minute. We look on the 5, we see that in a more detailed perspective. So let's keep that in mind, that even though the longer term trend is up, we never want to rule out the downtrend, especially when we start seeing signs. Now, the only thing is, like I said before, we see signs, but we don't trade off of signs. We trade off of confirmation. Enough signs in a row and give you confirmation. So all we need is for prices to break down below this zone. And also, you guys, I know I'll be focusing a lot on the S&P 500 today, but make sure you drop in the chat what you'll be trading. So let me know what you guys are trading today. Let me know, drop it in the chat, because I want to know if it's any good charts out there that I'm missing. I only have 2 sets of eyes. It's only so much that I can see and so much that I can cover. So if you guys know about anything good, any good looking charts, let me know. We'll do some analysis on them right here today. So we see that this breakout zone is holding up. Support is right now being found at 39.30. So let's keep that in mind as well. Still in the price discovery period. We just need to let the market do what it does, figure out which way prices want to go, and then we'll be all good to trade in that direction and make some decent profits for the day. And then journalize our trades, make our Excel sheets, and call it a wrap. That's the plan for today. So while we have a minute to spare, let's go ahead and check over on the Dow Jones. Oh my goodness. Sheesh. Oh my. Yeah, I definitely, on the Dow Jones, we have to lean towards a short trade for the day at least. Whenever you see markets go straight up like this and then come straight back down, they usually have one pullback and then continue that down move. So that's something to keep in mind for my Dow Jones traders. Seeing a very similar situation on the S&P where prices went straight up at the open, came straight back down, made that lower high, pushing down towards the support level, still holding up its support for now. So we see the buyers trying to step in down here and reverse this thing and get the trend back up. But they have a lot of work to do. First thing they need to do is close above the close for these tweezer tops up here. So that level would be 39.34. We need to see a close above there, and then we should be good to see higher prices potentially. Not guaranteed, but that's a good sign if we see it. But until then, the buyers really don't have too much to bank on in terms of prices going higher right now until they break above that level. If we pull up the line chart, we can just see that, yeah, prices are moving down. We have a potential double bottom right here, so let's see how that plays out. I'm not quite sure if it can hold up. So right now, I'm pretty much neutral because I see signs for both the bulls and for both the bears. And that's usually what you typically tend to see within a price discovery period. And sometimes when you're excited like me, I'm excited that it's Monday. I really am. I'm happy to be trading these markets and be able to potentially make some real money. I'm happy to be trading live again. So I'm really excited. I came into the week turned up. I'm on another level right now. But you don't want to take that excitement and apply it to the market when it's not needed. You still have to be patient, sit back and wait. No matter how much excitement you have, the markets don't care. It's about doing the right thing all the time. No excuses. So that's why I'm being patient right now and waiting for the trend to just establish itself. And that's it. Patience is the name of the game. We're already getting that lesson first thing off the bat Monday morning, not even an hour into the first session. I tell you guys about patience all the time. And once again, here it is, showing his head, teaching us another lesson today. Remember, those all-time highs are not too far away. All-time highs are located at 39.58. That's 24 points away from where we're at right now. And if we know how the S&P was moving last week, seeing a 25 point, 24 point move right now is definitely not out of the question at all. Now, one good thing about seeing a market that's stuck in a consolidation range is that the longer the range lasts, the more opportunity you have when that range breaks. And that's because a consolidation period really is just a build up period throughout the market. It's not like people are not trading. People are still active during the consolidation period. It's just that buyers and sellers are really balanced. It's almost as many buyers as it is sellers, and that's why prices never break above a certain point or below a certain point. But the activity is still there. And it just means that one side is building up momentum to break through. And the longer it takes to break through, the bigger the move is going to be coming out once the break does happen. So keep that in mind when the patience is trying to test you and test your mental stability. Just remember, the longer it lasts, the better the opportunity is on the other side of it. So keep that in mind. It's like a rainstorm. The harder it rains, the brighter the rainbow will be coming out of it. It's just about being able to wait through the storm till the rain starts to kind of dissipate. Then you walk outside and enjoy the beautiful rainbow. So that's what we're doing right now. We're waiting for our rainbow to set up once prices break out and this price discovery storm passes. So this is our breakout area right here. So it's a slow day so far this morning. But nonetheless, we don't want to let the market put us to sleep. We want to stay vigilant and continue to analyze and see what's going on. So if we're looking at the chart now, we see another tweezer top that formed at the same level that the tweezer top from before formed on. We follow that to the left. We see that was not a major level, but it was a level nonetheless during the pre-market hours for a good little while. Prices could not break past that area from 907 to 924. So for about a good 17-minute period, we can round that down and call it 15. So is it a major level? No, it's a minor level. But even minor levels matter in the market, especially on the 1-minute chart. So that's something you always want to remember. So I feel like in this scenario, you could really argue both sides. And that's why I'm staying on the sidelines right now. Breakout zone or nothing. Let's see what's going on with the Dow Jones. So right now on the Dow Jones, we are seeing a bounce at 32,800. But what's interesting is seeing that bounce can last, because if we're coming out of a down movement like this, we have to lean towards the downside for the Dow Jones, which means that if we're leaning that way for the DJ, we might have to lean the same way for the S&P. Now we see, like, as we clicked away, buyers came in and tried to push prices higher, right? They pushed them past the tweezer top. That was a good sign. But all of that momentum they had, they were not able to maintain. And prices eventually pulled all the way back, undid everything that the buyers just tried to do. And right now it's trying to push through that breakout zone. And notice that we made that move on higher volume. That's exhaustion volume right there. The buyers exhausted themselves on that up movement, and now it's nothing left in the market but sellers. And we see prices pushing past the bottom of our breakout area, which is a good sign, but it's not complete confirmation. We need prices to close below that level. If they can do that, then that would be a very good sign. But until then, unless we get a close below it, then technically we're still in the breakout zone, and we still need to be patient and wait for our trades to come to us before we start doing anything. GJ is what I'm looking at. All right, so let's look at GJ real quick. Hold on, let's make sure. Well, hold on one second. Right now, we're potentially about to break this zone, so we don't want to miss that. Not at all. When we get a minute, let's check over and see what's going on in the GJ department. Let's see what they're doing over there in Great Britain, across the pond. All right, so breakout is not happening right now. Let's go ahead and check that out. GJ. Here we go. GJ. Hourly chart. Kind of bearish. A slight double top. A lower high coming out of that. I don't know how I feel about that. Not very promising. But at the same time, I don't know if I like that. But I was gonna say at the same time, prices really just pulled back to a previous high level. Now, I don't follow GJ all that much, so it's hard for me to say which levels are important. But if the trend is up and it came back to a previous high and it's finding support, a potential double bottom, it's not the time to buy now. But if it breaks above 151.98, so basically we can round that up and say if it breaks above 152, we can go long. So above 152 with higher lows and higher. Man, y'all have to excuse my spelling. I'm trying to type fast. All right. So boom, let's get back to the S&P. Let's see what's going on. What did we miss? Not too much. Prices are still in the breakout zone, just playing around. Now, one thing about the breakout zone that's important that I'm starting to see is that the buyers are supporting themselves at 39.30, which means that more than likely the sellers probably are not going to be able to take this market back from the buyers. So if we really want to be aggressive right now, we could go long. I mean, the zone is holding up. We know that the zone is holding. So all we really have to do is go long at 39.30, maybe put our stop just 2 points below. But okay, I guess me being aggressive is not the mood today, because every time I said I want to potentially take an aggressive trade, we see the market just completely say, nope, that's not the right move. Look, watch what I'm about to do. You see how the market just pushed down. If we had our stop below these wicks right here, or even below right here, we probably would get hit, because it looks like that's where prices are trying to push back down to. So what I was about to say about the zone was that it looks like the buyers were trying to hold up and actually keep prices above it. But as soon as I said it, the seller stepped in and was like, oh, that's what you think? Okay, watch this. So technically on this last candle, prices closed below the breakout zone. Now it's not a major close because the whole candle wasn't below it, but nonetheless, it closed below that box, and that's not a good sign for the buyers. If the buyers want this move to the upside to continue, they need to step in right now and protect this 39.30 level, because if not, then based on what the sellers have already been able to do throughout the market, they've already made lower lows, lower highs, starting from a major level of resistance at 39.30. So it's not looking good for the buyers right now. We have another major level down below, 39.27. We can call that one 39.25. We know that those quarter levels are important. So yeah, just being patient. Today's price discovery period is taking a little bit of time. This might be one of those days where it takes an hour for the breakout to occur. And one thing I also learned over the past few weeks is that If the market does not align with what you want to see for a long enough period of time, you just have to be okay with calling it a day and walking away. Like, if this market is not trending like you want it to, you just say, you know what? I'm not going to drive myself crazy trying to find trades in a market environment that is not most effective for the strategy that I use. In those situations, it's just better to walk away. Don't try and put a square peg into a circle hole and then be mad when it doesn't work and keep trying to bash it in there and jam it into the space. It's not going to work, bro. You just going to break it. Don't do that. Just walk away and come back the next day when the rectangle that you have lines up with the rectangular space you need to put it in, and then boom, you connect. That's all trading is. Line up your market strategy with times and periods where the market is giving you the best conducive environment for your strategy to work, and then make it happen and get your points, get your profits, and get up out of there, man. That's it. We are here to interact with the market, observe, take note of what we see, look for any patterns that we know are known to work, and then take advantage. Now, if we're looking at the line chart, bro, we have to lean towards the short side right now. As a matter of fact, I'm really thinking about flipping my bias, but it's still a little bit too early. The signs are promising, but it's just too close to the breakout zone for me to short it right now. But I really like the price action and movement that we had coming down to break out past the bottom of this breakout zone. Like, we saw it on the line chart. Lower lows and lower highs across the board. That's what we love to see. As a matter of fact, let's go ahead and draw a slight trend line so I can show you guys what I'm talking about. Right here. This is what I'm looking at right now. Now, with the candles up, it was a little hard for me to see that. And that's why I like switching between the candles and the lines. Because sometimes those wicks can throw you off and maybe give you a false picture of where the actual close for the candles were, because that's how you calculate the line chart, with the close, not with the open or the lows. So we still need to be a little bit patient, but I like what I'm seeing on the downside. I don't know. What do you guys think? Drop it in the chat and tell me what your thoughts are on this breakout area and potential move for the S&P. Because if we look at the Dow, I'm pretty sure they're going back down as well. That actually, it looks like the Dow Jones is where the action is today. So we might actually go ahead and place a couple of orders over here. Now, if we were to short the Dow Jones, right now it's pushing towards the daily lows. Just came back from a major level of resistance at 32,775. We know that those quarter levels are always important. Now it's pushing down towards the half level at 750. Next level below should be 725 and then 700. Now, of course, we never want to go short towards the lows. If anything, you want to wait for a pullback. So maybe if you see prices come back up to 79, we could put an order right there. Have our stop. Now with the Dow Jones, it's a little bit different. My take profit, 48 points. My stop loss, 24 points. So that's what this right here represents. So let's put an order over there because that's where the action is. Now, if I can get prices to come back up here to the top of these areas, I'm definitely shorting. See all of these wicks up here? In my experience, whenever you see a down move like that, if prices ever come back to these levels, you pretty much have a very, very good chance of being able to catch a nice short trade. And that's because consolidations, blocky consolidation zones like this, are not just going to get ran through by the market unless a whole lot of volume comes in at that one moment in time. And not that it can't happen, but it's extremely unlikely. So you just got to play the odds. So we'll keep our orders up here. The trend is strong right now. We might not even be able to catch those levels, which is okay. That just tells us that the trend is on, and that we can definitely start to look for those short trades for sure. And that's the good thing about being able to understand the correlation between the Dow and between the S&P. Because we saw the Dow Jones moving to the downside first, and then the S&P caught up. Now, let's see what happens as we come into these levels right here. I don't know if they can hold up. It's really just one lone wick by itself. I don't know if one wick by itself can hold off all of these sellers that are pushing the market down into that level right now. But we see that volume is rising. So whenever we see volume starting to pick up, we start to look for that potential exhaustion. Now, it hasn't happened quite yet. This candle is not large enough. This volume bar down here is not large enough to consider it exhaustion quite yet. If anything, it just means that sellers are strong in the market right now. They have a lot of momentum. So we don't necessarily want to go against that. We want to go with it. Trade with the trend. As we can see, the downtrend has already been showing its head, and I think we have finally gotten the confirmation that we need, that prices do indeed want to move lower. Now with the Dow Jones, we didn't even get a pullback to 75. They came all the way back to the 50, push past. They're trying to touch 25. They're at 31 right now, 731. So we'll keep our order where it is towards the 70 levels. I still like the trades from those areas if we can get a pullback up to those levels. Now with the Dow Jones, a 40-point pullback is nothing. So don't let it surprise you if prices come back and they're able to hit those levels. Now with the S&P, we should be able to see a nice short trade right here against this last low in the market. Remember, when the market is moving lower, you want to wait for prices to come back up and test that last low. But it looks like right now, this wick could potentially be the pullback. So let's see how it closes first, and then let's see if that holds up to be true. So all we really need is for prices to come back up, tag this trend line, or best case scenario, tag these tops up here, and then we should be able to see a nice reversal coming off of those levels. Let's check on the Dow. So the Dow is coming back up to 750. Let's see how it plays against that level. Doesn't necessarily look like it wants to reverse. It looks like it wants to continue moving higher, just based off of the fact that volume was a little bit extended right here, and we had a bullish engulfing on this candle right here. So if buyers can continue to push it up, we should be able to get that order at 71 filled. So let's see how that goes. But in the meantime, in between time, it looks like the S&P just tried to come up and test that trend line. Did it touch it all the way? No. But does it have to be perfect? No, not really. Not really. So that's a good sign. I like seeing the trend line hold up. Now we just need some bearish candlesticks to start forming after that, and then we should be confident taking that short trade. But right now, buyers are pushing in the market a little bit higher right now with a little bit of momentum. That's interesting. So our order at 32 could get filled. Notice how markets broke out of the breakout area, and now they're coming back to retest it. That's one of the major classic market patterns and market trades that you can take. The breakout retest, one of my favorite setups. Now, if we get the best area from the breakout retest, I think it would be these wicks right here, because everybody is looking at the breakout levels. So we want to put our order maybe slightly below, or slightly past those levels, so we don't catch the obvious level. Because sometimes markets can shoot above a certain price and then come back down, but you don't want to get caught up in the initial movement where it overshoots. And as you guys see, the numbers up here start moving, which is telling us that our orders on the Dow Jones just got hit, and our order for the S&P just got hit as well. So right now we are in 2 short trades. So let's check over on the Dow Jones and see how that's going. Ooh. Oh my goodness. I don't like that one. No, I don't like that. No, 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 no. No, no. Gotta get out of that one. Same thing for the S&P. With the S&P though, I like that a little bit more, so we'll stick to it. We take a loss, we'll take that L and keep it moving in stride. It looks like we're about to get stopped out, but we'll hold on to it. I still like these wicks right here. I want the market to prove me wrong if I am wrong. So what's interesting, if we do get stopped out right here, what'll be interesting is the fact that we broke out past the breakout zone and then we ran straight back into it. Now that should be considered technically a false breakout. Remember, the overall trend was up. Now we came back to a major level. We tried to break it. We did for a minute, and then we came straight back into it. I'm pretty sure if we look at it on the higher time frames, yeah, look at that wick right there, man. We definitely need to be long right now. So let's go ahead and look for areas to get out of this short. I do not like it right now. Not right now. Let's see if we can get back out at break even. Oh, close enough. I'll take it. Boom. Appreciate you, Mr. Market. So right now, down about 11. Not too much to worry about. Now that we realize what the overall trend is, it looks like prices are trying to move back up. So we should actually try and take advantage of that. Of course, we need a little bit of confirmation. But bro, this is one of my favorite setups right here. The breakout, that's false. It tries to make you think that prices are moving lower. Then the buyers push it right back. And then for the rest of the day, maybe, not saying this could happen, but I've seen it before where for the rest of the day, coming off of a false breakout, prices just move higher and higher. So we'll see what happens. I don't think sellers are completely defeated, not quite yet. But they're showing signs that they could be. So this is what we'll do. I think I want to potentially go long as prices stay above this trend line and above the breakout area. Put my stop down here at 25 or 27-ish. And then we should be good. Notice how we're seeing higher volume on this pullback right here. So we'll have to wait and see how this candle closes to see if this right here is exhaustion or if it's continuation to the downside. So if I would have held that short trade, I would have made stupid profits. So that's just another indication that I'm all over the place today. I'm a little bit aggressive in my entries, but that's okay because the trend is picking back up. So I'm being aggressive towards the right times. Earlier on, it was not the time to be aggressive. But now that we see price discovery starting to kind of wane away and we see which direction the trend wants to go, we're pretty much setting up for a nice push higher. But we just have to be patient and be aggressive when the time comes. But I don't know. What do you guys think about it in the chat? Anybody in the chat, if you want to check out GJ, I did analysis on that around 9:59, 10 o'clock. If you missed it, slide back on there. Also, check the chat too. Above 152, you should be going long. And I'm about to be going long very soon on the S&P. We see that the trend line is holding up. Let's make sure that we're not going long into a lower high. We are not. As a matter of fact, that's a higher low. That's perfect right there. If that's not what we want, then what do we want, people? That's perfect right there. So let's go ahead and try and take prices back up to the top of the zone, top of the breakout area. Put our stop right here below this wick at this level at 29 even. So boom, let's put it right there. Looks like we might get stopped out really quick. That's okay. Just tells us that our entry is a little bit premature. So we need to be a tad bit more patient if we do get stopped out. Because remember, with this strategy, your stop is very tight. So you have to pretty much catch prices at their best level, which means you got to be extremely patient. It's not a lot of leeway room to make mistakes. Find those good entries and take them. So let's see if we get stopped out right here. If we do, that will indicate to us that we are a little bit early. But I like the long move right now. Overall, if you have bigger pockets and you can trade with a bigger stop, do it. You could put your stop technically all the way down at 26 points. For me, since I got in at 31, 5 points is a little bit of a large stop for me. So I don't necessarily want to put that much risk on the table. But prices are moving higher. Let's see if they can continue to do so and make us a happy trader this morning. So we're in at 31.25, potentially looking to take it back up to 39 even. But just to make it a complete number, let's make that 39.25. And boom, there we go. All right, so prices are trying to continue to move up. Let's see a strong close right here. I need bulls to show me something. Showing signs is not good enough. We need signs and we need confirmation. But the line chart looks good, man. Everything is lining up. Just have to be patient and see what happens. We see volume starting to creep in right here. I'm interested in what that means. Usually you see a long tail candle wick like that with volume increasing. It's not necessarily a good sign for the buyers. If you see volume increasing like that, you want to see a stronger close by the buyers. Buyers had strength to push prices up here, but they still closed down towards the breakout zone. So maybe the downtrend is not over, you guys, because technically that's a lower high, lower high, lower high, lower high, and a lower high in comparison to what happened here. So maybe I thought we were out of the price discovery period, but we're really not. Like I was telling you guys earlier, this could potentially be one of those days where the market is so choppy that I just decide to not continue to trade, because as you see, we've already taken some losses already. So if we keep continuing to take losses within a consolidation period, it means that we gotta adjust. We either gotta stop or we gotta trade the range. And you know I don't like trading ranges. I like trading trending markets. So for me, my option is to stop. So we'll keep that on the table. That could definitely be a potential scenario and a possible outcome based on what we're looking at, because I do not like how this market is setting up right now. Not a big fan. But I'll be patient. I'll let the market shake itself out. If I get stopped, I'll take it. If I take profits, I'll take that too. I mean, we're only about 3 ticks away from our stop, so that's probably going to get hit. You know, we can always hope and dream, but reality is our stop is hit. So let's go ahead and look back at our trades so we can kind of see exactly what's been going on. We took 4 trades, 3 on the S&P, 1 on the Dow Jones. On the S&P, this trade got stopped out for break even. We were a little bit aggressive back there, if you remember. This trade, same scenario, stopped out at break even. The third trade took a loss. And then on the Dow Jones, we took losses over there as well. We took a loss right here. Let me pull up the line chart to make it a little bit more clear. Yep, we took this loss right here. Trying to play the downtrend, but the buyers bounced back with a lot of strength. And we got caught up in that. So right now, man, I think I just need to be a little bit more patient, because clearly the trend is down. Now, is it moving down as fast as I want it to? No, but it's still moving down nonetheless, regardless. That's what the move is. So we'll just keep that in mind. So I think I'll give myself one more trade for the day to get myself back right. But if not, I'll cut the bleeding and stop the bleeding while it's still a chance and not really try and lose too much. On the days when it's not working, you always want to control yourself, manage your risk. Don't let it get too big, because every big loss starts off as a small loss. And you always have an option on every trade to call it a day and say, you know what, it's not working. Let me go somewhere else, do something else. Go practice, go back test, go demo trade, whatever you need to do. Go read, go work on your chart studies, go work on your analysis, man. It's a million and one things you can do outside of trading besides hitting the charts. You can work on your Excel journal. You can work on building your spreadsheets. You can work on looking at your trades from the past. Anything. Just don't trade when you're not in a good mental mind frame. So let's check the higher time frames. Let's see what's going on. Prices are moving down. Like, what can I say? We can start at this top from up here. Follow prices. They make lower lows and lower highs all the way down. Now, did they have this one up move where they tried to undo what the sellers did? Yeah. But they just came back up to a major level of resistance right here at 39.40. They turned around, moved back down, lower high, lower low, lower high, even high, but not a lower low. So if anything, that just tells us we're in consolidation. On the 1 minute, the trend looks strong, but on the 5 minute, it's more so like, yeah, we're still in the consolidation zone though. So that means we still need to be patient. And thinking about it, has the price discovery period really ended? Because if we saw price discovery being over once prices broke 40 or broke below 30, if prices flash down to 26, but then they pull right back up to 30, can we actually consider that a break? Because yeah, it's below it, but it's trading right on those levels. So to me, the breakout is not all that strong. Not quite yet. Which means we just have to be a little bit more patient. So this is the plan of action going forward in the future. I'm going to wait until about 11 o'clock, 11:15. If prices don't move before then, I'll call it a day. So if 11:15 hits and we don't have any type of movement and markets are still consolidating, I'll just call it a wrap. So that's the plan. Let's check on the Dow Jones. Wow. So Dow Jones made a higher low, another higher low, and it's continuing to move higher. Interesting. I haven't looked at GU all day. It's not really doing much today. Yeah. Nothing going on with GU. At least not for me. Not for what I'm looking for. Patience, patience, patience is the name of the game, especially today. But let's look around the horn and see what's going on with the rest of the market. Let's see if anything is trending that's major. We know USD, CHF, dollar Swiss. We always keep our eyes on that one. I do this pair and I do a lot of analysis and trading on it on my Twitch stream. So make sure you check me out on Bison Trading, the Bison Trading Show. You can follow me in the links below in this description for this YouTube stream. The link is twitch.tv/Bison Trading Show. Me and my guy Darren, we get over there, and one of the pairs I break down over on that show a whole lot is Dollar Swiss. Overall, we're looking for an uptrend. We're looking for prices to continue higher. We see an inverse head and shoulders right here. We see the neckline being held up. Now, me personally, I'm probably going to go long on this pair somewhere throughout the week, probably today, because I don't want to get in after prices already move higher, but just for a long-term trade. And I'll tell you guys more about that tomorrow and why I'm doing that. So make sure you tune in 9:35 p.m. Eastern Standard Time, twitch.tv/Bison Trading Show. I'll give you guys the 411 for this move right here. Now, Euro, GU, I don't really trade those like that. AMC is making big moves. It's up 20%. So if you trade AMC, that might be something you definitely want to keep your eyes on. GE up 3%. Good for them. Good for them. Delta. Ooh, yes. I have a family member that trades Delta. They have a a call option on it. They bought it at a $45 strike price for a cost of about $3.90. So their option is in the money right now. They're doing very well, making big bucks. Anything else moving? Apple is up. You know I'm a long-term believer in Apple. I love it. If you're a long-term stock trader and you're looking for a good position to add to your portfolio, Apple at 122. I mean, come on, man. That's a deal. That is a deal. Moderna, and they're okay. Square Cash, very good. If you're looking for financial technology, I like them as well. Home Depot, always a solid pick in any portfolio. As long as people need to build houses and do home repairs, Home Depot will always be important. Tesla, coming off of lows of 560, is back at 700. Hey, not giving any recommendations. I don't have a Series 6. All of this information is just really just my opinion, educated opinion, but an opinion nonetheless. So that's something that you need to keep track of and be aware of. Very important. Very, very important. So let's see what else is going on. Dogecoin, I like to call it dodgy coin because it's real dodgy. Let's not talk about too much. Let's make sure we don't miss anything on the S&P. No, not too much going on. So let's keep looking. So yeah, dodgy coin because it's real dodgy. It started off really nice, and then it just kind of lost steam. What happened with Dogecoin, y'all? What happened? Then Tilray, cannabis stocks. You know, eventually cannabis stocks are going to have their day. I don't know if it's going to be soon, though. Until it's legalized in all 50 states, who knows? But anyway, that's our scroll around the horn through our watch list. Let's look at QQQ. That's important as well. I know some people in that one. Let me get some analysis on that. So with QQQ, I mean, if you're looking for the long-term picture, like where prices are going to be in a year, you would technically be buying at very low prices right now. We came from a high of 340 almost. We got up to 337. We fell down about a good 10%. So around 12% we fell down. And so far we bounced up. We made a higher low. So if you're thinking long term and you know how indexes move, then hey, there you go. So anyway, let's get back over to the S&P. We don't want to leave our baby for too long. We just want to give it enough time to make the moves that it needs to make. So remember, you guys, we want to watch this market until 11 o'clock, 11:15 at the latest. If the move has not been made, then we will call it a day and get up out of here. Keep our losses small. We're looking to make back these losses, though, and take some good trades. It's just a matter of time. So let's pull it out to the 5-minute chart because I'm seeing a very interesting development right now. I'm seeing a potential support level being established. I thought the level should be at 39.30, but it turns out the level is actually at our quarter level at 39.25. Now I can't believe I missed that one. Now notice how if we pull the 5-minute out, if we look at 39.25, we see that prices are coming back down into that support area over here. They did it one more time in the pre-market session during the London trading hours. We came back to that level, didn't hit it perfectly. We hit 27, but it's not all that perfect, but it's good enough. We came back to those same levels and hit it once more. So that's a promising sign. It looks decent, but we know that this market is really kind of consolidating a little bit, so we still have to give it time. But we will take note of what we see and keep it on the docket. But one thing about seeing signs like that is that we always need confirmation. So if we want to talk more about that potential double bottom, also notice how the most recent leg, the most recent touch of that double bottom was made on higher volume. The highest volume candle since 10 o'clock. And before that, it was the highest volume candle since the open. So we know that this type of volume right here is extremely significant. So let's see if prices are able to stay above these levels. If anything, we might be able to put a buy order down here because we see that buyers have already been showing support at these levels. So let's just go ahead and try and take a trade based on what we see already forming on the chart. And then if we can get the long trade from down there, we might be able to take it back up to the top of the zone. So right back where we had our original profit target at 39.25, that will be a nice 12-point move right there. But even though we're seeing good buying signs, we still have to remember the sellers are never defeated, because we saw a lot of good buying signs plenty of times in the market before, especially over here where we took this loss. So even though we see the nice signs, we still don't want to disrespect the sellers, because they could come in at any time and push prices lower like they've been doing so far throughout the day. But we'll take this order down here if we can get it. At least I think so. I don't know. I don't think I want that. Nah, I'm good. Because I still think it's just too early for me to go long. Even though I want to buy at prices down here, the only thing I'm banking on is the fact that prices have already shown support at these levels. But I can't just go long because prices come into the support level. I have to see higher highs and higher lows and see a bounce off of that support level. Because sometimes if you just have a buy order at support, it could just get ran through. So my order was right here. It would have gotten hit. So let's see what happens and see if we would have gotten stopped out or if we would have made profits. I would have had my stop 2 points below at 25.25, which is right here. And I would have had my take profit at 39 above, or I would have moved it to break even if it hit 2 points in profit. So if it hits 25.25, then I was definitely right to get out of that trade. Now, if we look below, we can kind of see volume creeping in a little bit as we get back towards these low prices. So let's keep note of all these signs that we're seeing that the bulls are trying to put in. We already know on the longer term picture, this level at 39.25 is a major quarter level that's been holding up as support before. Every time we come into these levels, we do it on higher volume, and sellers have a hard time really pushing through those levels. Excuse me. So it's not confirmation that the buyers are going to do anything soon. It's just signs on the table. Buyers start to make enough of these bullish signs, then it's only so long the sellers will be able to hold them back. We know that the overall trend for today is up. I've seen so many situations like this where sellers try and take over, but because the longer term trend is up, buyers eventually come back and say, look, we're going higher. But right now the trend is definitely down, so we got to focus on the down move. And right now, because I don't trust in a down move, I'm just chilling and waiting on the sides, waiting for my setups to show themselves. That box was broken. They came back. They retested it. Now they moving. GJ on the daily chart. On the daily chart, the trend is up. Running into a little bit of a potential pullback right here. We had a doji from yesterday's candle, well, Friday's candle, and today we're just kind of moving down a little bit. Long tail candle wick starting to form. We still have a lot of time left to go in the day, so GJ can still do a lot. So keep that in mind. You get above 151.99, so basically above 152, go long. But if not, then I mean, you're making lower lows and lower highs. You gotta pay attention to that. Coming out of the double top, you had another lower high right here that could not break resistance over here to the left. Made another lower high right here and pushing lower. If you check the line chart, you can see what I mean. Double top, came back, boom, lower high, pushing back down. So buyers, you might need to be a little bit patient. Now here's another thing I'm picking up on the S&P 500 just from watching it and observing it over these past few minutes, is that the buyers keep coming in with these potential bullish moves. Like, we see it in the volume, we see it in the price action in the wicks. But despite all of those things, the sellers are still in control. So that tells me that I think I need to start leaning towards the short side. Because in my opinion, I've seen patterns like this before. And usually when they just move down slowly like this, kind of just drifting slowly downwards, eventually prices just break and they just drop. Sellers finally come in. I guess the buyers step out of the way and they're like, hey man, I've been buying all day, I've been losing money, let me stop. And then the sellers just say, oh, are y'all leaving? Oh, okay, see you. And then from that point on, sellers just take control of the market for the rest of the day. So let's see if that might be what kind of forms today. Not guaranteed, but it's a potential move that could happen. We always want to keep it on the table. But my overall plan still remains the same. Give this market until 11:15 to do something. And if it doesn't do what we want before then, we will call it a day. But yeah, make sure you guys tune in tomorrow, because I'm probably going long on dollar Swiss tonight or today. Probably gonna make the run to the bank, get this money over there, and put it in my account. Probably just trade maybe a 10-cent pip, nothing too major. But dollar Swiss is one of my favorite pairs. I've been following it since 2015. I'll explain to you guys why I'm going long tomorrow, 9:30 p.m. Eastern on the Bison Trading Show. But as we were just looking at on the daily, we see a lot of promising signs. Go to the dollar Swiss chart, look at the daily, and look at the bullish engulfing that just formed on the most previous, I think, recent either 2 or 3 last candles on the daily. Check that out. And you'll kind of understand where I'll be coming from tomorrow with my analysis. Man, I want a short. I really do. But it's like, I bet you as soon as I go short, that's when the market wants to move up. So let me chill. Let me chill. My gut right now is just telling me short it. Man, we in there. Look, I gotta listen to my intuition, y'all. So let's put our stop up here at 39.30. We know that that's our major level of resistance above. And let's go ahead and put our profit not at the daily low, but right above it, about 2 ticks above the daily lows. Now, of course, I guess I was right when I said that as soon as I short, the market wants to go up because it's moving. So maybe it would have been a better entry to go short where my stop is at. Because notice, not only is this a key level, 39.30, we talked about that in our pre-market analysis, but it is also where all of these wicks reside. So if prices were to reverse, they would probably do it up here, which is where my stop is. So a little bit risky of a trade. I've been trading aggressively all day. I don't know why. I don't know. I need to look back on my performance today, rewatch this stream, and then kind of break it down. I think that's another good another good thing about recording your trades on the stream. You can go back and actually view your performance in real time. I kind of talk my thoughts out as they come across, so I can analyze my thought process and how I was thinking based on what the chart is and be able to say, oh, well, the trend was down. You should have been looking for such and such and such. So that's another way that I kind of use my resources to help me analyze and become a better trader. You got to understand yourself and the markets if you want to succeed. So not only understand your chart patterns, but understand how you as a person interact with all of the patterns that you see, all of the market environments that you come across. What do you trade like when you're up? What do you trade like when you're down? What do you trade like on a Monday morning when the market is just getting started? All of those things matter. So it looks like we could get stopped out. We're only about 3 ticks away, which would be frustrating, but that's part of the game. So the Dow Jones came back up, made a double top at 810, and then the downtrend continued. Now let's see if the S&P can do some of that the Dow Jones was doing. Let's get some of that action over here. Come on, sellers, y'all are in the wrong market. Why y'all over there with the Dow Jones? Come over here to the S&P. I would really appreciate y'all right now if you did. Okay, they heard me a little bit. Okay, there you go. Come on, sellers, come on over here. It's a good party over here. Y'all can come right on in. No cover charge or anything. Free drinks until 11:15. Come on, sellers. But I thought I said I wasn't trading until 11:15. What happened to that? See, I'm breaking my own rules. Discipline. I'm not perfect. Hey, what can I say? I'm working on getting better every day. But it starts with figuring out what you need to work on. That's step number 1. And that's why we do the Excel sheet all the time. We bring it up. We have accolades and improvements, and we go back every single day and we keep track of all of those things. Just trying to remember, what do we need to do right? What do we need to avoid doing wrong? Yeah, I definitely should have been short up here where my stop is. But now I'm in a funny position because I'll get stopped out as prices go to that level. But then if I short from that level again, I'm really just taking the same short trade that I just came out of that ended up as a loss. So yeah, we're almost at our daily loss limit. Our daily loss limit is 50. 50 kind of keeps us in check. Make sure we don't lose too much on one specific day. Anything more than that, I want to call it a day. And the good thing about this platform is that it's automatic. It has a feature where it's called automatic lockout. So if your daily stop gets hit, the platform will automatically lock you out for your own good. And that's something that you can set up to kind of prevent yourself from sabotaging yourself. Like we don't want to be the reason for our own downfall. Like, come on, man. We're not out here trying to do that. No way. And you just always have to protect yourself, protect your loss limits, protect your capital. The same way you have stops on your trades, you need to have stops on your daily losses. And then also have stops on your weekly losses. Be like, look, I don't want to take more than this amount of a loss on one specific trade. I don't want to take this amount of a loss on one specific day. I don't want to lose more than this amount on one specific week. And I don't want to lose this amount in one specific month. All of those things will help you stay grounded and help you focus on managing your risk and keeping money in your pocket and not letting it go out. Like Nipsey Hussle said, all money in, no money out. We're not trying to let anything leave. We want everything coming in, man. No withdrawals, deposits only. But yeah, we have about 25 minutes. If we can get something to happen within that time period, we'll take it. But if not, we'll go ahead and leave all of this chop behind in the past because we don't like to trade choppy markets like this. My scalping strategy works with trending markets. And when the market is not trending, it's just like, hey, man, we don't really need to take that, do we? Nah. So let's see what happens. I really want to more so trade the Dow Jones. It's trending more on the Dow than it is on the S&P. So I think we might actually do that. So let's go ahead and draw up our levels. We know that 75 is important. We know that 800 is important. And we know 750 and 725. Boom. 25. And then of course 700. This red line right here in between represents the low price for the day, so keep that in mind. Now if we're looking for short trades, we could probably look to catch it off of the 75. So let's see if we can't get prices to come back up, test that level, and then we go short. Oh, rejected. Huh? Your account is currently set to liquidation only due to the low net liquidate. Oh. I can't read today. Your account is currently set to liquidation only mode due to low net liquidating value. Please contact the trade desk for additional information. So let's check that out. Oh, I changed my daily loss limit to 35. I'm a smart cookie. Because I had it at 55, but then I was like, you know what? Over the weekend, I forgot, but I actually changed it to 35 because I felt like if I hit 35, I'm going to hit 55 anyway. Of course, you always want to give yourself those extra couple of trades to say, you know what? I'll give myself a chance. But if you're not trading well throughout the day, the chances of you just automatically turning it around at the last moment, of course, is always possible, but come on now. So now that we've actually hit our daily loss limits, I think we have to call it a day, don't we? What do you guys think? I think yes. So with that being said, let's go ahead and bring up all of our orders, because you never want to just close your platform and just leave. This is what I like to do right here. Well, first thing we can do is get rid of this breakout zone. Get rid of that. Get rid of our trend line. and just bring up the chart, just align all of our fields. I get a screenshot of every chart that I trade. Boom, there we go. Save it in my chart folder, March 15th. All right, boom. After you do that, then you just pull up your information for that day. I'll go to position history for my account. Boom, download that. That'll bring up everything that you need to know for today. And then you just copy and paste everything into the Excel sheet. Bring up your profit and losses over here in this column, your total P&L. That way you can make your equity curve for that day. After you make your equity curve, then you simply import the screenshot that you just took, bring it into your Excel sheet, and then you're all set up. After that is done, figure out what you did right that day, figure out what you did wrong, and put that into your accolades and your improvement columns. And then you'll be done with that day's sheet. You'll be done with that day's day of trading. You have everything journalized. You finished your session. Now you're all good to call it a day. So if you don't have this Excel sheet, make sure you email me at bisontrading2018@gmail.com. That's bisontrading2018@gmail.com. And I'll get you a version of this Excel sheet over to you pronto, because if you want to participate in our live sessions, you need to be able to have access to that chart. That's extremely important. It's like the textbook for your class. You always want to have it. So with that being said, man, it's been a great day. You know, I learned a lot, took some losses, but we keep the losses small. We never let the losses get too big. So that way we can bounce back when we actually have our great days. Now, tomorrow we should bounce back, be able to make some good profits and just focus on being patient. Today, a little bit excited, a little bit overly aggressive. It's okay to be aggressive when the trend is strong like it was during last week's period. But on days like this, when look at how choppy this market is. Look at that. Straight chop. Is it moving down? Yes. But it's moving down in a very choppy manner. On days like that, it's just okay. Call it a day. I could sit here and keep trading and keep stacking up losses because I'm not in the flow of the markets right now. So with that being said, man, you got to call it a day when the time is right. Right now, it's a day. So make sure you catch me tomorrow. I'll be right here. Once again, 9:10 a.m. back at it, back on the S&P, back on the Dow Jones. Also tomorrow night, tomorrow night, 9:35 p.m. Eastern Standard Time, Bison Trading Show. The link is in the description, man. I don't have too much more to say. Thank you guys for tuning in, and I'll see you soon.